The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and we got some things going on today. First, let's catch up on where the market's at right now. So we got the S&P, it is down almost 10 points on the day. We got the Nasdaq down 10.5. We got the Russell down 19.9, 20 points right there, down 2% on the day. Russell just getting slammed. We have the Dow down 87 points. We have gold is basically flat on the day. A lot of movement, though, still going on nevertheless. And let me go in there, and there we go, down 28. There we go. I thought that market was locked there because I've been shorting that thing all morning, and I just had my quote analyzer up here. $28.9. I'm like, it is not flat unless it is not moving, and it's obviously moving. So had some real nice short moves going on in gold all morning long, and down there with 2% on the day. Got silver just flying down over 3.5% right now on the day. Copper down about 3.5% as well. Oil down almost 3%, down to $2.65. We have corn right now is pretty flat on the day. It's only down a point. Soybeans down 23 points. Euro dollar up 30, pound dollar up 51, Aussie dollar down at 97. Along with that, we got the euro yen, it's just up a mere 6 pips, the pound yen up 14, and the US Canadian up 11. US yen is down 12 ticks on the day, with US franc there down 24. And we had a little bit of news come out, and we got some more coming. Right, so we got our FOMC statement. Not expecting a big surprise, of course, on the rate adjustment, but the statement's going to be what everybody's going to be looking at. And so get ready with some volatility and coming right around the corner. So what did we have this morning? Well, we had the manufacturing PMI over on the pound, and that number came on in right there at 4:30 in the morning. And, oh, wait a minute, let me refresh my page. That is correct. There we go. All right, so came in a little bit better than expected. And so we saw some decent movement on the pound. They're not a whole lot. It started moving pretty fast before it was even out. And so the PMI didn't have this massive impact. It's I think that number maybe got leaked. What do you think? So, but it's been oscillating up, down. I've had actually some decent short trades despite the positive number there. And that's one of the things I talk about is when I do go in, I do news trades. I hop in, I straddle them, all that. At the same time, about 15 minutes later, I'm going to the charts. I'm following the charts. I'm letting the charts take me from there. And, we had some other reports come out this morning. We have the big report coming out, which easily can stunt other movements on other news. But we also had earlier in the morning, right around 8:30 or so, we had, see here, 8:15. We had the ADP non-farm payroll. Market also was moving right down into that the entire time. Flew down and then decided to move on up before it was all said and done. And that basically, just didn't get a massive movement off of it. And everybody's waiting to see again what comes out of that FOMC statement. And that's going to come out again at 2 o'clock. So FOMC statement at 2 o'clock. And you want to make sure you're ready for that. And just, be ready. Like I said, there's, let's see here. Let me go ahead and put this in. All right. And what else? We got monetary policy meeting minutes coming out of the yen. So even though it might be quiet right now on the yen, and the pound yen and the euro yen, we're probably going to see some decent volatility once the market opens back up there on the yen this evening. And we have building approvals tonight. So just to give you a rundown for the day, and I'll even, we'll pull the charts up, take a nice little look at them over there. Let's see here, and get that up on the chart for you. There we go. Okay, so going in, like I said, looking at the pound, and on the pound dollar, let's see, resume my chart, refocus it there. Then we had our announcements right over here. And we can see right there the news came out, but we already had quite a bit of movement going on. And then but after it came out, I mean, we did get a nice, decent, 45 pip move off of the pound PMI. And so you had a decent trade there. But then, I mean, it was over. It was done. And that was about your 15-minute, what we call fundamental shock. So fundamental shock came in, boom, done, profit taken on the straddle, out. And then it's back to the charts as usual. And so I enjoyed a couple of short trades right there, then stopped trading, and the pound dollar's been going up ever since. And I can hop on over. We had, like I said, the USD yen. We'll look at that one. And right here, that's just one of the many things that you can trade on the markets. And don't forget, I mean, we have Germany closed today, Italy closed today, France is closed today, Switzerland closed today, all on, Labor Day holiday right now. So don't forget that does, of course, have an impact on the markets. And Japan is going to be closed tomorrow. So, but for tonight, they ought to definitely have some movement. And so we can go over here and we look at this 8:30 move, and we had quite a bit of movement. Like I said, before it came out, 8:15, 8:30, we go in and it's already pulling down. And then we had to move down right here over that 15-minute shotgun hour right there, about 97. So that gave you, as long as you're able to get in and get a straddle on there for about $20 to $30, then you should have been able to at least take profit, get out of break even at the worst case scenario, and then it moved on forward, pulled on back a little bit, and so shouldn't have hurt too bad, or you could have made money on that trade either way, but wouldn't have been a total loss. It didn't just do a full retracement back to the 8:15 levels, way up there again. And let's see, what else do we have on the docket? So we got that. Now we can also look at, one of the things that's sort of hard to look at, we'll look at it in a little bit, but gold is one of the possibilities you could play. But if you're going to play them on Nadex, you got to understand that gold is closing out here in about 15 minutes. So the only thing you can trade would be like the weekly binaries on them. So we'll take a look at those here in just a little bit and see what kind of possibilities could we use on the FOMC statement. And, maybe you want to do an iron butterfly. Maybe you want to do, a straddle. Maybe you just want to trade directionally, or maybe you just want to watch. So any of those cases can work out well for you, just depending upon, doing the right one at the right time with the right instrument. And I like to make sure that people do understand that there's, like I said, there's a lot of different ways you can trade Nadex. You can trade directionally. You can trade, non-directional random walk, meaning I just want it to move. Up or down, I don't care. That's like a straddle. Or you can do neutral trading. And that's where I expect it to stay, inside of a range. And, so if you're going over here and we're pulling up gold and checking that out, let's see here, going on over and looking at the gold markets coming right up. Shorted on down there. And what we got over here? So, right here at the 1.5 deviation. And so you could go in and you could look at the Nadex spreads. And so right over here, and you can go in, you could pull up your gold contracts, commodities, gold. Notice these are going to expire at 1:30. They're going to do any good for FOMC. And you can see, is there enough implied volatility to do anything here? Or is there maybe a bunch where you could, go in a different direction? But right now, again, we're right around, right here, 1444, 1445, basically. And so you're right here at the money. And so what, if you were going to do an iron butterfly, how would you do it? And what would you be saying? And this is becoming fastly one of my favorite strategies on Nadex. And there's a lot of cool ways to play in. But, I mean, there's like these 7 o'clock and 11 o'clock Forex expirations now, which is fantastic. Think about dead time. That's a great time to do neutral trading, right? So now you want to know what kind of news is coming out, such as the U.S. Yens are releasing their monetary statement. So that might be a time you want to, chill out on them. But I could go in here, and I could say, let's see if we can find the right one that we like. We'll pull it up. So there's 1428. And then we can go over here, and we can get, okay, well, what about on the flip side where... And it sort of looks weird because your risk-reward seems inverted, but I'll explain it to you here in a minute. And we'll go over here and we'll say we, sell this one. Okay? So by doing this trade at this moment, then what we're doing is we're saying that gold is going to stay. Now, Now we're saying between now and Friday. Now we can close out before then, okay? But we're saying gold is going to stay between 1468.5 and 1428.5. So next thing I'm going to do is I'm going to go over to a chart. I'm just going to look at those levels. So 1468.5. Well, that's pretty high. So we can go up here. Now, of course, gold is, a crazy monster too, so it can move. But right there, so we're saying stay between that level. And the one lower really is not as nice as you'd like it to be, but 1428.5. So right here. So that level. And let me pull the other line out there, 1428.5. So right over here. So as long as gold stays in between these levels, we actually make money. Okay? Now, if you're looking again at the risk reward on this, it seems really odd because it's like $72 risk, $77 risk. So am I taking on $77 risk to make $28 and $23? No, I'm not. Because I'm doing both of them. Now, gold expires. It cannot expire both above and below. It can expire either above or below or in the center. And so if I go here, I can let me do this, pull up, stay in draw mode there. And so on this one, again, I'm saying, gold will stay. Let me change my text. We'll make it black. Okay. And then we'll just say set default. There we go. All right. So gold stays, below 1468.5. Make $22. Okay. If it goes above it, then, I lose, 78. Okay, actually, I guess it's 23 right now, but whatever. 23 and 77 at the moment. But I make, let's see here, what do I make? $28 on the bot 1428 binary. All right, so combined, I can, pull up a little calculator, put the two together, and go, what does that mean? If I, lose 77, I make 28, then my risk is $49 on the trade, right? So risk being $49. So I'll put that on there and hit OK. And then right over here, I'm going to go in and I'm going to add in another one. And I go, okay, well, what about if it goes below? And I'll go through this when we get back. Okay? Stay right there. Be right back after the break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just to go into this trade for you in a little more detail, and I know this is a little more advanced, but some of you out there really like doing neutral style trading. And I get this request a lot. How can I trade to collect premium on Nadex? And so what I'm doing here is I'm selling the gold 1468.5 binary, the Friday one, okay, the weekly. And now I can get out of it before then, which I would plan on doing so. And so long as gold stays, below this price right here, below 1468.5, at or below it, then I will make, say basically $23 on the trade. Market's fluctuating while I'm talking here, but basically $23 on the trade. If it goes above it, I'll lose $77 on that binary. Okay. What if the market stays below, not just goes, but stays below? Okay. This area right here, then I would, the prices that's put on there, then when I had, let's see, here we go, just trying to make it match the price when I was talking. So if it stays on there, you got $72 right there, and what would happen would be I would actually be able to make $28 if it stays above the strike price, okay? And you can see the strike price up here in the order ticket, 1428.5. So if it stays above 1428.5, I'll make $28. But if it stays below it, I'll lose $72. Okay? So again, risk reward doesn't sound real good. But remember, when it expires out, it cannot expire above and below. Both sides can't lose. Only at most one side will lose on this trade. So either it'll come down here and say be at 1410, come up here and be in 1480, or it may be between 1468.5 and 1428.5. So if it comes up here and it stays and expires up above, okay, up above 1468.5, then what's going to happen on that trade? Well, I'm going to lose $77 on the one I sold, but I'm going to make $28 on the one I bought. So my net risk is going to be $49. Now if it comes down here and it expires below it, I'm going to make $28, okay? Or if it's below it, I'll actually lose, $72 on the one that I bought, but I'll make $23 on the one that I sold. So if I lose 72 and make 23, then that means my loss would be $49. But if it stays in between, then I'll make $51, because I'll make right here 28 on the one that I bought, and I'll make 23 on the one that I sold. So it becomes a neutral trading strategy. And I try to get these as close as I can to the same. So right there, that's actually pretty good where they're at right now on the trades. And so just looking at these trades and putting them together, you know, FOMC's coming out. Like I said, be careful on any trades you're doing right now. But this gives you a neutral style strategy. Now, what if you think it's going to fly out? Well, you could invert it. You could do a lot of different things. So I'm just trying to show you, this is an example of when something comes out and, you know, you don't expect a big change or whatever. This is a trade you could make. And let's say if it flies below it. Okay, what am I going to do? So if I go on and I go ahead and put this trade on right here. So let's say I do 10 contracts on each side. Okay? So I sell, buy, place order, place order. Okay? Filled on both sides. Now I can go in, and this is the one I sold, so I can buy it back. But I sold it at 29, all right? So I want to go back and I want to, you know, buy it back at, say, $3. So obviously you want to buy back lower than you sell. So I'll put that order in. And then this is the one that I bought, so I want to sell it higher. So I bought it at $73.50. So now I'm going to sell it at, say, $97. Why? Well, I have till the end of the week. 2, have you ever seen the market on FOMC day? It'll fly up and down, right? It'll fly up, and then it'll fly down, then it'll fly up. So all sorts of crazy things can happen. And knowing that there's a possibility, knowing that can happen, then I could look at, well, does this look like a good trade? I put that on. My take profits are, and if it flies up, one side takes off, flies down, second side takes off, flies up, one side takes off, and then by the end of the week flies back down. I'm able to be profitable on the trade. Only if it goes all the way down through Friday could I actually lose on this trade. So, and then of course the implied volatility is bumped up, so that actually allowed me to put my strikes a little wider than normal. And I have till the end of the week. So, you know, there's a lot of benefits on this trade right here. And hopefully you're able to put a couple of these pieces together as I'm weighing them out for you. Be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're just going through, how to do these iron butterflies. How do they work? And, what are the things that you can do to take advantage of them? So, I want to make sure that you understand it's just a neutral strategy. You're literally just trying to say, hey, the market's going to stay in between a range. And if you don't think it's going to be neutral, then don't do it. Okay? Sometimes, if you choose a short time, that can fit you because there's not much time. And, hey, time passes and that can't go outside your range. But if you choose too short of a time, also that means, time passes, time's over, and if it did go outside your range, you don't have time for it to come back. So there's a balance of the two, and you just want to make sure you keep those things, in balance, keep them together, and, make sure you have your working orders going and all that stuff. So over here, let's see here. On the contracts, and I'm just looking at a couple different ways to do these to make sure, I'm helping you do them right. And, like I said, you always want to do, those contracts right there. So let's see here. And updating all these pieces up and put them all together. Okay. So again, those gold contracts, you want to go in and you want to be buying. So if you're following along, like in your demo account, I always suggest you send a demo. Learn it, own it before you do it. Okay. Don't just hop in and go, oh, he's doing it, I'm going to do it. So learn what it is. Figure out how it works. own your trades. And, demo is a very kind teacher. Live is a very expensive, mean teacher. And so I always encourage people to make sure that they know what the trades are, they know how they work, they're putting all the pieces together, and know what they're doing when they're doing a trade. So, but let me pull these positions up. I just want you to see them right now. Right now you're going to be down just because of simple bid-ask spread, right? So market's fluctuating, bid-ask spread's going all around, all sorts of different things are happening, and again, to follow through the steps, how do you do it? So we'd pull it up, and let's say we were going in and we were buying the 1428.5 down here, okay, and then we're selling up here. Let's see, well, we were selling, it's moved a little bit already in our favor, but 1468.5, so we were selling that one for 22, okay, and so like I said, it's already moved quite a bit, but you want to have that trade on, and you want to get a good fill on the price. You want to make sure you can get both sides filled. That's huge. It's very, very, very important. But you want to make sure you can get both sides filled on that trade in order to be able to do it. If you don't, then now you have a 1 to 2 reward risk ratio. You can make 25 for risking 75. And one of the things to help you out with that you can take advantage of is go in and click over here under My Account and click on Settings and click on Preferences. And then inside the platform, click Allow Multiple Ticket Panels and hit Set Preferences. That is why I'm able to go in and open 2 tickets at the same time, side by side like that. If I didn't do that, I would only be able to open one and just keep reusing the same one. And now I also could go in here and I could do the opposite, okay? And by the way, they're starting to increase volatility, so they're getting ready for this news announcement to come out. Right there and right there, so it's coming. But now it's very well balanced now too, by the way. So the 1428 by 1468 is a very well balanced trade, and that lays out how it works. And if you ever have any questions about iron butterflies or straddles or anything like that, just let me see. But be happy to help you out, let you know what to do, how to put them together. We could talk through it on the air, things like that. And have people call in, and sometimes they have questions. I have people that submit questions online. Inside of our diagnostic members area. They're inside the TFNN members area, so the diagnostic subscription inside TFNN members area. And so you can go into that area, and I'll show you sort of basically what happens, how it works. And let's see here. What you do first is you log on to TFNN.com. So you just go to TFNN.com. And then you go to the Diagnostic Box Spread Analyzer. Click on that. Fill in the form. You get 2 weeks free trial. You get access to tutorials. You get access to the box spread scanner. You get access to the deviation levels. So all these pieces that I'm putting together for my trades. And then you log in. Once you've logged in, you can go to the scanner here. Before you do that, probably the first thing you're going to do is, go through the tutorials. So right here under tutorials, you got Getting Started. And, I'll walk, it's like, how to use the help desk and, Chrome, and how to use the ticket extension. And right there is, how to use the box scanner. Okay. And what are the deviation levels? How do they work? And then I go into more information for you, so step-by-steps, like, how to get your Nadex account going, defined risk trading, markets, how spreads work, and how to pick spreads, and some examples. And go from there into, finding out more about this Nadex exchange, who is it, how does contract settlement work, and then there's a whole section on bull spreads. So you can go to bull spreads, ranges, leverage, risk reward, outcomes, how all those pieces work. And then there's a whole binary section that goes into how the binaries work, risk reward, strike prices, and things like that. And then, of course, I teach more advanced things on the air. And then we have the archives to the Diagnostic Trading Hour, so you can listen to that and the Bull Bear Binary Hour. So once you got that, then you can go over here to deviation section, and you can click here to view the current deviation levels and see the deviation levels for the day. They're updated every day. We got futures markets, forex markets, the Nadex markets. So if you trade any of those right there, the markets that we cover, then you can access that. If you have questions about anything, you just go here and just click new to create a new help desk ticket and ask questions. And then for the box spread scanner, you can go in here and take advantage of it. It shows you what markets are open, what markets are closed for the spreads, okay? And you just select whatever market it is you want to trade. And then you can start building, simple risk reward. This is a risk reward graph. This is your P&L. This is the price of the underlying market. And you could say, you know what, I want to do, a straddle. And you simply click, right here, and then, click right there. And then there's a straddle. So you could build all different models when you go in here. I mean, you can literally tier them. There's a ton of different things that you can do all at once. So it's pretty cool, just the ability to go in and build different risk-reward models. And then the details, the specs on how they work. So what's the underlying symbol? What does it actually equal? So euro-dollar mini-watt is 1, and Nadex, euro-dollar, tick size, 0.0001. Both have a value of $1. What about if you're doing, the 6E contract? Well, it takes in 0.001, but the tick value is $12.50. So, because it's worth $125,000, dollars there, and it's the way that they do the currency conversion, and it's really just the way that the CME does FX. But you'd have to do 25 Nadex spreads to equal 2 6E contracts. You only need 1 Nadex spread to equal 1 mini watt. And so we give you the ratios of all the contracts. So how many small caps does it take? What about US 500s? How many does it take to equal 1 S&P E-mini? And crude oil, how about that? What if you want to trade crude with this? So you can go in and it literally does all the math for you. It shows you how long it is till expiration, and you got direction, you got buy, sell, you have break even distance. So how far does it have to move? Some of these trades are so far out of the money they're pointless to you. I mean, that's $1.46 out of the money because the market's down here. It can't make any money unless it gets inside the spread. And at one point it wasn't. It was right by it, but oil's moved down today. So you don't want to trade that trade, and people will hop on and they'll trade these because they cost $6. I mean, that's why they're trading. They're trading them based on risk, which is a bad idea. Risk needs to be part of your factor, but ability to actually get that risk capital back needs to be the other part. And if you can't make a dime until oil's moved to $1.46, that's the wrong trade, okay? So there are plenty of other trades you can choose. Once it's moved 8 cents, okay, now you're making money. That's much better. Or once it's moved a couple ticks, so you're making money, things like that. But you just want to be able to put all those different pieces on there. And you can go in and, you can reset the filters. You can get the ones that are really close and say, hey, I just want to see the ones that are close. Well, that's the at-the-market spreads, okay, at the market. You go down here, and now it's only going to show you ones that are like 3 ticks or 0 ticks away from where the market's at. I mean, there's small caps trading at the same price as the Russell is. And this one's even a couple of pips in your favor. So, meaning you're actually ahead when you get in. You're not down the bid-ask spread. You're actually up. And here's another one where you're up as soon as you get in. So there's some pretty cool ways you can put all this together. But once you got your break-even distance and that's acceptable, then I'm going to look at potentially my max risk. Okay? It depends on how I'm trading. If I'm trading like floor ceiling, never get stopped out, max risk is going to be important to me. But if I'm just using them to trade the underlying, because I can't really split an S&P E-mini contract up, right? If I buy one, I can't get out a half or anything like that. I also can't do just 1/5 of an S&P E-mini. I can only do 1. I can't do 1/10 of an E-mini Russell. So I could go and try to do a ton of shares on the RUT, or not the RUT, but on the IWM. But that'd be very margin intensive. So it's like 1 or tough. Well, on here I could do 1/10 of the size, or I could do 10 of them, or I could do 100 of them. Okay, so that's a big benefit. So to me, I look at the risk more as, if I'm going to use it as no stop loss, then yeah, okay, I want to look at that max risk. But if I'm using it as, hey, I get in if it gets 3 points to get me, I'm going to get out, then my risk isn't necessarily going to be $31. So it could be $30. If I did 10 of them, maybe a few dollars or whatever. So I'm going to look at what is my risk based on, and I'll take stops. I take stops all the time. So I'll hop in and I'll get out of them. Now, so if that's not my concern, that's more of a margin leverage thing. Then I'm going to look more at max profit. Do I have some profit potential in the trade? Because sometimes you look at a trade and $454 risk. Well, my risk is the same on all of them. If I'm going to get out, if it moves 3 points against me, it doesn't matter. But why put up $455 to take a trade that can only make 44? I mean, this trade can make 85. I put up half the amount of money. So obviously that's just a better trade for me. So these I could put up even less, but this one expires at 3, this one expires at 2. So there's a lot of again, a lot of different ways to trade them, and you don't even see this stuff if you're just staring at the platform. All you see is this big list of binaries and or spreads, and you're trying to do the math, and you're just trying to figure out, what do I do next, and how does it work? And we even have a little help guide over here that helps you out. So sort of gives you a quick overview of the scanner and what every level means. I did some screenshots and sort of spelled it all out. So there's a lot of tools in there, and I really can't imagine trading the spreads without it. I use this on every spread trade I do, because it makes life much easier because I don't have to do all the math, and I'm like, okay, well, what exists, what meets my requirements, and if I have a margin limitation, let's say I can only put up so many dollars in my account, then I could put max risk in, thinking of it as, like I said, margin, so like 150 right there. Say that was the most I could put up. Well, then it's going to take out trades that would require more than $150. And then let's say I want to buy. Well, then I'll just click the buy side. So now I have close to the market spreads that don't require more than $150, even though I may only be risking, $10, $20, $30. That's my maximum risk. Which is nice because the market could fly against you and it wouldn't matter. And then I have my break-even distance in there on how that works. And then I have my max profit. So it makes it very easy. And then I can choose demo or live up here. So there's a little plug-in that goes in. And then when I do that, then I can click on the button. And then it'll open the ticket for me. And I can just hit place order and submit it directly into Nadex. So this is one of the many ways, and this is one of the times that you might want to consider. Now, what else might you want to do? Okay, and this is a very helpful thing right now. Let's say you're short the S&P, or you're short the Russell. It's been moving down this morning. You're short it, but okay, that FOMC is about to come out. And so you want to go, okay, what am I going to do? Do I get out? What if it flies down? What are some possibilities? So this is, I guess we could call this advanced spread day here. What are some possibilities? And I'm going to go in here and I'm going to start looking at all these. I'm like, okay, well, if I'm going to get a hedge, I probably need a risk-reward ratio of 1. And if it's going to hedge me, I want it to hedge me at least within a few points. So let's say I would put a 3-point stop loss on my position. Okay? So what would that be? Well, that'd be like 30 ticks, right? And, okay, so all these are within 30 ticks or less. Let's see, that one expires at 2 o'clock. So is it going to give me a hedge at all? So give me ones that give me at least 30 minutes till expiration. All right, so all these expire after the 2 o'clock announcement comes out. I could use any one of them I want to. And if I had a Russell on, it takes 10 Nadex spreads. Okay, 10 Nadex spreads right there to hedge the position off. And that 30 keeps coming in and out, so let's just get rid of it. Let's make it like 25. That'll get rid of the 30 that keeps popping in and out of there. So every time it becomes 30, it shows up, and then it becomes 29, it doesn't. So now 25, okay? So when we come back, I'll wrap up which one you might want to choose if you're going to use this to actually hedge your position. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so what we're looking at is, if you're in right now and you're in on the Russell, and it's been, just moving down just perfectly right there, just a beautiful, nice, solid move, and you want to hedge your position off, then, what would be some choices? So let's say you got in right around, you just got in this last dip, and you've been writing it down, but let's just say you just added onto your position, right at 925 or so. Well, you could go in here, and you could buy this simple binary right here, or not binary, but spread for 925. So let's look at it. What would happen? Okay? And so on that spread, when it comes up, then you could actually pick that one, and it would be available. I think we may have made our parameters a little tighter there. Let's reset so I can find that one real quick. And so on the 925, the one that I can buy for 925, I go in. And again, it expires at 3 o'clock, okay? So right here. And again, a little more break-even distance. That's why it's fluctuating a little bit. But if I buy that one, now I won't make any money on my Russell, so I could buy 10 of these, okay? And what would my risk be? 9 ticks. So basically it's like having a 1-point stop loss, and it'll stop losing, okay, when the Russell hits 922. So if it goes down, the Russell's making money, it's losing money, so it's going to wash itself out, okay? But if the Russell flies down, I get to take advantage of those profits. And if it flies up, I have a hedge up to about 929. So if I don't feel like that's adequate, I may have to find, a different one that might work better for me. So but that right there would allow me to have basically a stop, like a 5-point stop loss for the cost of a point. And so, basically at 20% of the cost. So that allows me to stay in my trade short, but if it starts flying up, then I might just want to go ahead and, check out of the trade. So that's one possibility. And like I said, there's a lot of possibilities over here. This is if I wanted a 3-point stop loss, I could go and I could do this trade right here. And that would kick in about 927.5 is when it start making money for me. And so, but if it goes down about 3 points, same way as the other one, then I wouldn't make anything down to about 924. But past that, then I'm making 3 points where we're at, which is about 921.6. So this one would give me a stop all the way up to 945. So if I want a big stop for about the same amount of risk, okay. But again, it won't kick in. This one won't kick in until 927. This one will kick in at 925. So my risk is going to be between where the market's at and where I buy. That's my actual risk on the trade. If I'm short the future contracts, if I'm short at 924.7 and I buy at 927.6, that gives me a 3-point risk on the trade. So this is probably, just in case the thing flies, probably your best bet as far as risk and what you're getting out of it. And you'd need 10, okay? So 10 of them that you put on there to do the trade. And that's actually how you would hedge with a Nadex spread with either one of those contracts. And you just see like this one sort of like it takes longer for me to make money going down. This one, it gives me a lot larger hedge. So I probably, out of the two, I would say, all things being equal, I like this one a lot more. Even though I have a little bit more risk on my trade, I have a few points risk, which is a few $100 on a Russell. This one I only have about $100 risk, but I only have about $400 protection. This one I have like $1,800 in protection. So huge. I mean, exact same amount of money I'm having to put up, but a little bit more risk, but a lot more protection. So do you want more protection up, or you just want a little bit of protection so you can try to stay in? And if you do this one, then make sure you put like a stop loss on your future contract up at 929. And we'll see what happens here in the next few minutes. All right, y'all have a great day, safe day, and check it out. Have fun.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.